And it is time for the Word on Wall Street. Top investors watching your money. Joining me right now, University of Akron Endowment Fund Chairman Dennis Gartman, Payne Capital Management President Ryan Payne, and Mahoney Asset Management CEO Ken Mahoney. Gentlemen, good to see you this Tuesday morning. Thank you so much for being here. Ryan, kicking things off with you with what economists are expecting to be another 40-year high in consumer inflation this morning. We're looking at the CPI up 1.2% month over month, year over year up 8.4%. That would be the highest in more than 40 years. You say this is going to mark the peak for inflation in 2022. Tell me about it.
Yes. I mean, I like to always take the more provocative view, as you know, Maria, and I think a lot of economists and strategists here keep talking about inflation being higher, but the reality of it is we're getting to a point right now where we're probably getting close to it actually coming down for the year. And I mean, just look at energy prices. We're at $98 a barrel. Remember, we were at $130 a barrel 3 weeks ago. And Nancy Lazar, who's on your show, who I love, she thinks inflation is going to be down to like 2% by the end of the year. That's a far cry from the fact that right now we're seeing inflation at almost 8.4% probably today, the highest since 1981, which is remarkable. And I think it's really important, too, because as an investor right now, and you think about the economy right now, if prices start to come down, and we know the consumer's in great shape, we're going to have retail sales come out, or retail I guess on Thursday, rather, they should come in pretty good. I mean, we're going to see a consumer that's really strong, and if prices start coming down, that's going to bode really, really well for the second half of the year here. So I think, and if you start looking at the bond market as well, we've really seen all these rate hikes priced in as well. So, I mean, we've already seen rates go up, anticipating inflation.
Yeah, we'll see. I mean, the heavy driving peak months are in the summertime in terms of gasoline. But, Dennis, it's not just the price of goods going higher. The price of credit is going higher. Our borrowing costs with the Federal Reserve raising rates and looking at the 10-year this morning at 2.8%. That was that level yesterday that unnerved investors. We're talking about the highest level here since December of 2018. How does this play into your thoughts?
First of all, you have to understand that I think we're still going to see even higher rates coming along in the not too distant future. I think the 10-year, now 2.8, will be over 3% without probably by the middle of summer. And I think eventually, with the Fed continuing to be moving towards a much more restrictive monetary policy, ending QE, beginning quantitative tightening, starting to sell from the back end of the yield curve, I think you're going to see the 10-year get over 3% and maybe make its way to 4% by the end of the 2022, 2023, and going into 2024. I think inflation is still problematic. And if it weren't so sad, it would be funny listening to Ms. Pataki talking about the Putin price increases. Prices were going up long before Mr. Putin started his war in Ukraine. Wheat had been rallying for a long time. Grains generally across the board had been rallying. Crude oil, yes, it is down from 130, but still it's at $97 a barrel. Sugar prices are higher, meat prices are higher. The Fed had been extremely expansionary for a long period of time and is now erring upon the side of becoming contractionary. But inflation is always and everywhere a monetary phenomenon, and it's going to take at least 2 or 3 years before the increase in the Fed's balance sheet makes its way downward and inflationary pressures become less accommodative. So be careful out there. Well, this is going to, I think this takes a long period of time before we see any deflationary or less inflationary circumstances.
Well, hey, that's what makes a market, Ryan and Dennis, right? You're on the other side of that trade, obviously. But look, if you're looking at 4% on the yield, then you're obviously expecting a sell-off in the stock market. Will earnings save the day, Ken? We got the first quarter earnings season coming out tomorrow with the big banks. We're going to hear from J.P. Morgan, BlackRock tomorrow, and then we're going to hear on Thursday from Citi, Wells Fargo, Morgan Stanley, Goldman Sachs. My question is, how much of the Russia war on Ukraine is going to be in these numbers that they're going to have to take charges because they had to leave Russia? And what are they going to say for the rest of the year on all these expectations of a slowing economy? What's your expectation for the bank earnings?
Not very strong. So again, it is earnings season, so it's nice, aside from raging inflation and all these headlines we have, including Ukrainian war, that there's something else to talk about here. We have earnings, and for the first quarter, maybe okay, but it's really guidance. I mean, look, banks thrive on a steep yield curve. We certainly don't have a steep yield curve here, right? We have a flat yield curve, in some cases inverted, the 2 and 10s, the 5 and 10s. So it's really hard for banks to make money. So it's going to come down to the guidance. And if you look at like the mortgage rates around Christmas time, you're looking at 2.75%. For a conventional 30-year mortgage. we're 5.25. The velocity of that. So I'm sure a lot of deals are coming apart. So I think for a lot of banks, look, J.P. Morgan is definitely the best in class, but doesn't mean you have to invest in J.P. Morgan as the best in class. I think the banks are going to have a lot of problems with, as you mentioned, some write-offs in the first quarter and guidance. Loan growth is going to be down. At the same time, you have labor inputs going higher. So to me, it's not a good place to be for the banks.
Well, yesterday, Anton Schutz said the economy is doing well. You want to buy the banks. We've got a situation where the stocks are looking good as well, and that the economy is still strong. So there's certainly a debate out there. Gentlemen, it's good to see you all. Dennis Gartman, Ryan Payne, Ken Mahoney. We will check back as news develops on earnings. Thanks, guys. Much more ahead this morning.